Recording. All right. That might be it, Michael. Welcome out, everyone, to the Market Watch Group weekly opening bell. My name is Scott. I will be your host. We are having a bit of a delayed start, but here, as always, are the disclaimers. And here is what we're going to do. We're going to look at the opening range, not futures. Now we have the range, 30 minutes. It's there. 20 minutes, actually, for me. We'll look at the range, what the market's doing. We'll look at the news. We'll look at the economic calendar. Did we look at that yesterday? I can't remember. And our market posture. We'll go into, it's a nightmare. I'm having to go into schwab.com to trade. I don't really trade well on web-based platforms. It's been a long time. We'll look at the implications as we break the opening range. We'll look at our early week shopping list, and we'll talk about the trading plan. So let's dive in. And market open flat, mostly. S&P down 0.01, Dow up 0.1. The NASDAQ down 0.25%. Apple's a little bit, we're getting a little bit tested. Russell down 0.08. Oil is flat, 0.01. Gold is down a little. Silver's down a little. I mean, it's just kind of a tepid day. Treading water. That's a good way to put it. Treading water with CPI. We look at the economic calendar. You can see that today there's nothing. We're just kind of, as they said, treading water. What do we have though? CPI tomorrow, which is an inflationary data. PPI on Wednesday. With the Fed announcing later in the afternoon, the press conference or the announcement comes out at 2 p.m. Eastern. The press conference starts 30 minutes later. So we've got a good chunk of inflationary data, followed by, am I missing anyone? I thought I heard a beep. Nope. Okay. Followed by the rate decision, which, as we've been watching the entire time, has been projected to stay where it is, unchanged. A very small percent likelihood of it rising. 1% chance, 1.5% chance. So yeah, essentially we're expecting the Fed to leave it alone. What else? Well, after that, we have retail sales and the standard jobless claims, but those have really just developed a camp at low 200s, 210 to 225, and has been sitting there. So feeling good about that. Retail sales is also on Thursday. And then on Friday, we have Empire State Manufacturing, industrial production, capacity utilization. So it is a pretty full docket on economic news this week. Two big chunks. And it's interesting because the Fed has come out and said, which I don't know why it's necessary to say this. They're like, we're going to leave, the ability to change course if we need to. You're like, well, yeah, of course. Like, why wouldn't you? Adjust when necessary. But I think they're kind of just reminding the market that as however things look now, it may change. What's going to help us to see that? The next set of inflationary data. So, yeah, a lot of inflation data this week, followed by the Fed decision. Okay, so like I said, those of you joining late, the Thinkorswim issue with Charles Schwab for me persists. Just like all of a sudden yesterday, out of nowhere, there was it's been a month, right, that we've been in that, and now all of a sudden, so Um, yeah. Okay. Let me get this up. I want to see. Nope, that's not it. That's not it. Where am I? Here we go. All right, let's just pop down to a 5-day, 5-minute chart. I don't know, Bob. So Bob said, "What happened? I'm still on Ameritrade." I even went in and it said, "If you're still on Ameritrade, still keep logging in through Ameritrade." But I had been switched over. I think Michael got switched over too around the same time. I think it was like November 6th or something. Okay. Oh, Jeffrey said he's still on. Um. Uh. Okay. Sorry. Yeah. So anyone has who has moved and who's still on Ameritrade? It's a little bit of a nightmare. Um. Here you can kind of see we've gone flat now. It looks like so we opened and now we're moving. Wait, do I have no Monday? Yeah, I'm on Monday. There we go. So we opened, dropped a little. We're pushing up. It's flat. It's a flat open, right? Fine. When you look at our 6 months, let's go back to daily. 6 months day. Why can't I get 6 months daily? 1 year daily? Oh, I hate using other charts, you guys. All right, I'm gonna have to do this. Yeah, so we're pretty flat right now. So what's going on within the context of our trades? So let's look real quickly at market posture. If you weren't here for posture, great. I mean, it was surprising, right? Was anyone else surprised? I was like, wow, I did not. I thought maybe we would jump quarter to a half of a point, and it just soared. Um, Increased strength on the long term, increased strength on the short term, increased strength on the volume. We unexpectedly got a new volume on Friday. Major markets interesting because it's down there at a quarter still. Michael said, "Yeah, blue is buying." Yeah, right. Where you're just like, wow, everything's just coming up kind of strong. The major market is the only place where there's like still some semblance of, we should be a little bit concerned. Um, and then sector rotation. Sandy convinced me that it deserves that lucrative full score spot, the full one. On multiple time frames, we have 5 sectors showing us a very broad market, a lot of strength in a lot of different areas. Um, so yeah, and the VIX also strong. Let's go take a quick peek. Now I'm gonna have to try to remember the VIX. What is the VIX? Do I need to put a nope? Is it a dollar sign? A dot? VIX dot X? How do I get an index? Indices. There it is. I'm like, there it is. Okay. What is the VIX doing? The VIX is up marginally. Well, I mean, it's actually up 4.5%. But if you look at where we are, I am starting to think about a let me get a drawing tool here. I'm starting to think about a consolidation line like this now, where if it popped, I would put on a half of a hedge. There's nothing so far that's had me inclined towards hedging other than the fact that volatility is low, right? Volatility is low right now, so options are fairly cheap. So a hedge right now would be cheap. And if you have a lot of bullish trades on, then you're obviously, more inclined to think about a hedge. But as far as a triggered hedge, right? So there's a number of different reasons, and we've done them all in here in this group. How do I do a half based on risk? So I would calculate, whenever I do this, I typically look at like risking half the trade. So whatever I would do, so if I'm risking half of the trade, so if I'm gonna bet, if I'm willing to risk $500, and I can buy my hedge for $1.40, well then I'm gonna buy $1,000 worth, and I'm gonna risk half of it, and that's gonna be $500. So whatever my risk is, so if my no, sorry, if I'm willing to risk 500 normally, I'm only going to risk 250, so I'll buy 500 worth. So in that case, I'd probably buy 3 contracts, and that would be half a hedge. Versus a full hedge would be 6 contracts. If the risk is $500, right? So that's just a sample. Whatever your risk level is going to take you to that place. And so now, if this happens and it breaks this consolidation, my thought would be it's probably going to come up. Maybe it gets up to this level here, possibly even higher. But the big thing we would be looking for is on the next dip down. If it doesn't get back into this area, that's our concern. So whenever I say to you, the more bullish I am, the more I start looking for what would it be the other way. This is what I mean. It's not like I'm looking for it like, oh, this guy is falling. No, woe is me, right? That's not what's happening. What I'm looking at is just simply saying, I don't want to get caught in complacency. And so I need to have a very clear visual expectation of what would have me say, whoa, that's not what we're looking for there. Because we know things like this, right? That's kind of our big concern is when this thing is escalating and in that type of an environment. This is the worst type of environment. This is the best type of an environment. Or if it just simply stays, we can't have that again. We're already low now. So does that mean it's only going to go up from here? No, it can stay down. It can whip back and forth. But anytime it goes through one of these little higher low blips, I'm going to put a hedge on. It's a matter of automation. If I don't need it, I'll take it off. And if it was cheap, it's not going to hurt me very much. What I'm going to make on the bullish trades is going to far exceed whatever small loss I take on the hedge, right? So, okay. Let's keep going. Next question, how do you calculate your risk? Well, your risk per trade would be and definitely go to some of the modules we have on this in risk management in the foundations course. But for me, it's usually going to be somewhere between 1% and 3% of account size, depending on, trade types, things like that. So if I have a $25,000 account and I say 2% risk per trade, thinking I'll be in anywhere from 5 to 7 trades at the most at any given time. That puts my portfolio heat around 10 to 14%. Individual trade risk is 2%, which means max loss per trade is $500. And that would be exactly right. Or if you had a $50,000 account and you went 1%, $500. If you had a, $17,000 to $20,000 account and went 3%, that would put you at $500. So you could end up at 500 a lot of different ways. No, that risk there is simply my trade risk. How much am I willing to lose on a trade? Because I don't have, this is a hedge trade, so this is just a little bit different. Normally on a trade, I'm going to draw a line in the sand. Then I'm going to pick an option and I'm going to say, we did this. If you want to look at the, if you want to watch the first options the second options foundations video, we did this using the Thinkorswim model that I can't show you now. I will be able to show you soon. I'm working on rectifying that for our class tomorrow night, of course. But if I were to, or if you were to go back and watch that video, you would see that we're going to, in a normal trade, I'm going to set a stop and a target and a time frame. And I'm going to use those going into the option pricing model to figure out if I'm wrong. And I'm going to say if I'm what we did was we went a week. So like the trade that we were looking at, we went out to this Friday. By this Friday, I'll know if I'm right or wrong. The only way I'm going to be in this trade longer than this Friday, any trade I put on from last week, would be if it's working. If it's not working, I'm gone. That's it. We're done here, right? And so by quantifying my stop loss at this coming Friday, that's what I defined as worst case scenario. That's what we're trying to do. So with a stock, worst case scenario is you stop out. That is worst case scenario. Well, worst case would be it gaps through your stop. So, but typically if it's not a super gappy stock and it's not earnings, you're not going to be super stressed about that. It could happen still, but probably not by a huge amount. So there's always gap risk, but with a stock, there's no time decay. So all you care about is, it doesn't matter if you stop out on day 1 or day 100, your loss is the same. Not true with options. You stop out on day 1, your loss is 20, day 2, 22, day 3, 24, right? It gets worse and worse and worse, whatever it is. And so if I position size that I'm going to lose $500 if it stops me out on the last day, that means that if today I see it going wrong and I manually close it, I've saved 4 days of time and I didn't stop out. So that's how I cut losses short, is not letting things stop out on the very last day. Anything less than that, we should have less than max loss. And then we compare that to the other side of how much would we gain if we're right. And we want that to be 3 to 1. Now with a hedge trade, I buy the same option every time, 5 weeks out, 5% out of the money. It's a formula. So I don't have to oh, well, how much is this going to be? I simply look at it. Now, if I can get it under $1.50, it's pretty cheap. If it's, closer to $2 or more, I know that the volatility is probably ramped up a little bit already. It's probably my second time or third time putting a hedge on. I've already got some, hopefully at a cheaper point. At that point, it's a total cost. If I buy, if it's a half a hedge, and I'm normally willing to risk 500, it's 250. So I buy, and I count on losing half of the trade. So if it's a normal hedge and I'm willing to lose 500, I buy $1,000 of whatever. So if it's $200, I buy 5 contracts. If it's 150, I buy 6 or 7 contracts. And then if it's a half a hedge, cut that in half. So hopefully that makes sense, because I do want you guys really thinking about your hedging activities and how are you going to do that. Okay. So that's, was reading some volatility info, January 24 coming in. I mean, maybe as of right now, if you look at the VIX right now, it is low and stable. For me, I see us right around this area here, which means you might have a blip, but we probably still have some good trading ahead of us. Until we, if we start to see things like this, that's a little bit concerning. this is why I think it's important that we have these, these hedge ideas. That never gave that was a lower low right there. Everything was looking pretty good. And then all of a sudden it gave us that little blip. And that's kind of what we're looking for here is we're drawing this line and we're saying if it breaks above that, and I'm hoping to get it, I think it would actually, I drew that line wrong. I would actually draw it a little bit tighter. And that puts us a little closer so that by 13 and a half, 14, I'm in. Because that got us the good hedge. Anything after, which would be these higher lows, they did okay. They did okay, if you remember. We did ultimately get up here, but some of it broke even when you didn't get out of it until it came back down. This trade here was the one that really did well and helped. So that's why I have that thought process in mind as of right now. Okay, so we looked at the economic calendar. We looked at our posture. Everything looks good. Let's go through the watch list. You should have trades. I'm assuming people have trades on. I'm assuming people are looking for some new trades. Bear with me. This is just going to be a little slower than. Hopefully, you can see why I love the Thinkorswim watch list because you can just toggle, bam, bam, bam. I think I could do the same here, but I'd have to set it all up, and I'm just going to have to type in. It's just going to be a little bit of a delay. Apple. Yeah. Stops are hitting, right? Tightened stops are taking place at this point. If you ever do need a secondary chart, I'm on TradingView. It's a nice one. You can get a real nice service to without having to pay for a subscription because I'm too cheap. Here's the Heikin Ashi. So I had tightened my stop up below the prior low, and I'd already taken some of this off, if you remember. And I think most of you who had traded this had already. A little late. What happened to my TOS? I'm locked out. I can't get it to, it just initiates and it is. Yesterday, I had a paper one open and I couldn't open the other one. And then neither of them opened. And then I uninstalled it and couldn't reinstall. I mean, it's a nightmare. I called them yesterday. They had no good answer. So I have to call back today. It's a pain in the butt. I thought it was going to be smooth. No problems for a month. But yeah, tighten the stop. This one's now done. So now what? Great. Set up for again, right? Anything you're trading that you stop out of with tightened stops, get ready for the next trade. That's what we should be doing. Adobe looked good, but we didn't trade it because of I didn't trade it because of the earnings. I said, look, if you like it, you got 3 days and it's actually working out quite well. Did anyone end up pulling the trigger on Adobe? I was like, very nice looking. The only problem is right there. Earnings are coming out on Wednesday. So you're just real tight. I usually like at least 4 to 5 days. They only had 3, but it's working. So there you go. Aflac. I think a few people pulled the trigger on Aflac. Okay. AIG looks like it's firing today. Your stochastics is turning down here. You have a small consolidation followed by a turn up. Both of those look pretty good. So the insurers look pretty good. Okay. Where were we? AIG. Let's go to AMD. I don't think Press is here today, but I know he took this one. Oh, it's continuing to advance. I'll tell you what, if I was in that trade, I would have taken I did Apple a half, but no, I didn't. It was a third. I'm doing mostly a quarter to a third because of the improved posture, but I would have definitely taken some profits, right? Definitely would have taken a third right there. And then today I'd be like, glad I stayed in some, or a half, a quarter, a third, somewhere in that range. What's next? That looks strong. Amazon. Ooh, okay. So Amazon looked like it could have been, but it's really just kind of a lot of sideways. I'm waiting for a little more confirmation on that one. I like PDD coming out of the consumer discretionary. APH advancing looks pretty good. Uh, didn't give much. That's just kind of a moving freight train right there. AXP. I mean, it's right there. So would you still consider it anticipatory? Yes, because look at your stochastics. It's hooked, but it hasn't turned. Hooked, but hasn't turned. Great. Are we willing to take anticipatory trades in this market based on a posture of a 6? Hell yes. Absolutely. Boeing has just been a freight train. Just look at that. Stomping higher. Really hasn't given much opportunity. BK, very similar. BX, however, was another one that we said we like. Not quite yet, but it's knocking at the door. So if you missed something in the financials, there's plenty of other places. I thought this was going to be terrible. It's not too bad, actually. It's going to be so bad. Okay. Did everybody have a nice weekend? I think I forgot to ask that. Christmas parties are starting. Of course, I love that. City. So I squoze what I could out of City. It moved even a little bit higher after. Um, you can see it does look like a consolidation is in order. A lot of things are looking very cuppish, right? We had this old resistance, and then it came down, all the way down, all the way back up to this 49. Of course, there's likely to a lot of people remember when it was here, and then it fell down to 20% lower. They've regained that, so they're starting to maybe lock it in a little, and that's going to possibly create this little handle, right? It hits this, and this little handle comes in. Maybe it comes back down here, turns. Yeah, at that point, we have what we need to break and head on up to this old 52, in my opinion. My lines are terrible today. Ugh, so bad. All right, so love it. Bob said, great party. Love it. Santa delivered by a fire truck. Awesome. That's so cool. Ours wasn't that cool. Now I a little feel cheated. COF. Same pattern. Yeah, there's that. There's that cup. COP oil. Oil's not there's oil's down. That's very useful for inflation. We're not really interested in trading oil. If I did, it would be WMB, but I do keep watching this just to keep an eye on things. Here's Costco. Oh man. Keeps on going. Beautiful. Beautiful, beautiful, beautiful. All right. CPRT. Oh, okay. Look at that. Starting to turn. That's a big confirmation candle there. Um, I don't think we would have Heiken Ashi candles yet. Oh, I stand corrected. So if you like it, you could definitely put a stop rather than down here under these lows. You could put that stop here at today's low. Does this give me my open high low? It does. 47.40, 47.81. Oh, you could put it. I mean, you could put a stop like $1.50, and if this thing moves again, it could get up here to 53. Um, yeah, looks pretty good. Put it on the list. Hmm. I didn't think I would find myself reinterested in Copart. I was thinking I was going to bounce it, but no, that was perfect. CrowdStrike, God, that stock is amazing, so strong. That's right. We sometimes this is what I mean. This is a great indicator, but you have to get used to trading with this thing up in this overbought. You have to. That's a fact. CrowdStrike. Let's see what else. DHI, another one that just keeps moving. Ooh, I'll tell you what. That's what happens when we're bullish. Fastenal, strong as well. Industrials continues to be strong. Here's gold. Gold continues to drop off. Of course it does, because I just had to pay like super high prices for a couple bars of silver. I mean, it wasn't much, but still. I mean, come on. Hate buying at the top. Well, where am I? RF. I'm gonna throw up this for Bob. He said, "Can we take a quick peek?" I don't know. I might see where it goes. I see what you mean. I mean, it definitely hits some resistance here. It does look like this Stochastic. I mean, I don't. It looks like it could be trying to make this a flag. Here's your pole. Here's your flag, and it looks like it's trying to bust up out of that, possibly. Hmm. Love it. Nick says up 100% on Intel calls. Tighten my stop, so I sell one contract. That's always, that I love that strategy to just take some. I mean, everyone's like, "Oh, let your winners run," but well, you are. You're trying to do that as best you can by saying, "Hey, 100% is a great gain." First of all, so I lock that in. Then I let the other one run, and it's a lot easier to let it run when you've already booked that first game. You're like, yeah, let's see what happens. I love that. Absolutely. Um, I'm in favor of that strategy, Nick. 100%. Where was I? I was at gold. Now I'm at Google. So Google kind of fell apart. I ended up in Meta, not Google, but I think we're kind of in the same place where it looked good and then it just sort of meandered. Here's Gap. Gap just doesn't want to slow down. Neither does Home Depot. Strong. IBM is one that's on our list and was traded last week. I think a number of people took it. ICE. I did not take that one, but we talked about that one, and that one's moving. Financials. Here's Intel for Nick. I think a good number of us took this one. Yeah, I see what you're looking at. Maybe see like, hey, can we get up here today? At this high, but it is pretty close to that high. That's a good looking trade, right? Yeah. So strong today, looks good. Um, that was one a number of us took last week. IWM. IWM looks all right. It's holding up. JP Morgan, strong still. Took both IBM and ICE up in both. Love it. Bob says, "Tell Nick thanks. I'm going to follow his lead on Intel." I love it. Also, those are exactly the types of discussions I would love to see in Discord. I mean, we're here today, of course, but I'm just saying. It's always worth it to just pop in there and be like, "Hey, is anyone in here? Here's what I'm thinking. What do you think?" It's nice to talk to people who see things in a similar way that you do. Nope, that's not what I meant. Oh, I can toggle if I get. I might have to get this set up. Where was I? I was at Meta. Hmm. Yeah, Meta and Apple falling out. Apple at least was able to lock some gain in. Not here. Who took Google? Did you end up making some and keeping some, or did you give it back? Let me know. This is going to be a wash trade, a break even trade here on Meta. I don't know what's with the communication services. We'll see if Roku and Netflix look that same way. Microsoft, that was one that I took. Not loving it, but not wrong. Not loving it, but not wrong. It's losing money, but I'm going to stick with this one because I don't feel like it's wrong yet. It's a little bit jumping around. I'm going to stick with it. Anyone else in this one? Let me know. Here's Netflix. Oh, look at Netflix going for a ride. There was a lot of signals on Friday, and you can see actually late last week, Wednesday, Thursday, Friday. We had this area, and it's some of them are flying. The Communication services are a little iffy. Fastenal, yeah, Fastenal is great. Okay, let's keep going. What time is it? No, we're doing pretty good. Nvidia. So, like I said, I'm in the vein of consolidation. It couldn't trigger me into a trade until it gives me a break of consolidation, ideally with volume followed by a higher low. It didn't. I'm watching and still waiting for the same thing. I'm not convinced that was the breakout. However, if it stabilizes above 450, maybe. PDD is one I like. Oh, PDD. So that's a consumer discretionary that I think looks strong and is viable today. The LTR is in a consolidation. That's not something I would trade now. It looks like it's a hook trade, right? It looks like it's bouncing off of support, but I don't like the lower low. And so that's what's causing me to not move into that. PNC was one from last week. It's just kind of grinding it now. That was great though. It's a good trade. Liked that one. QQQ. Even with the Google and Meta down, with communication services down. Actually, look at that. The bigs. Microsoft, Apple, Nvidia, Google, and then everything else is green. So interesting. Very interesting. Nope, I need that back. Where were we? RCL, another one that just sort of took off. Not much you can do with that now. Here's Roku. Roku looks close still. Now the group is struggling a little bit. And you can see that today this is down 1%, but this it's still trying. It's trying to fire something off. Here is Shopify. Now that looks viable to me. The stochastics has turned. We look like we have bounced off of this. We broke it, and now it's bouncing off of it. So it already broke to new highs, and now it found support on top of the new highs or the old highs. Yeah. Shopify looks strong, and that one is actually in. I believe it's in. Is that communication services like IT? I don't know. SMCI. That looks okay, actually. It's expensive. That looks better than PLTR. At least it's still a higher low. Snap is a freight train. It doesn't seem to want to slow down. Here is the SPY. SPY has now moved positive, but just barely. All right, we'll see what happens. Here is Tesla. I don't know about Tesla. Tesla's kind of stalling out. Here's UBS. Overbought. Here's UNP. This was on our list. Oh, it's close. It is close. You can see the sellers from Friday are no longer selling today. Not a lot of selling. It's kind of cup and handle-ish, but I mean, it could get up to 240 just to finish the cup. So if I can catch it by 231.5 and put a stop down here at 229, that's 2.5 points of risk for 9 points of gain. Yeah, I definitely see there's something developing here. Visa. Gosh, I mean, our watch list is strong right now. We've got so many good things. It's almost too many good things. Right? WMB. I like AXP way better than that. WMB, nope. Nope. And that's why, right? Walmart's still a dog. If it doesn't at this point, now would I be willing to trade Walmart coming out of a consolidation? Yeah, maybe, but not yet. Here's our XLs, XLB materials. looks pretty strong. We said we would actually consider a ETF trade on basic materials. I don't watch any basic material stocks. Here's communication services, not doing so well. It looks like it should be, but it's just not doing so well right now. Here is energy. Energy is still way well down. Here is financials, still looking strong. Here is industrials, still looking strong. Technology, starting to move again. Staples, stable. Stable, nothing too strong there. Here's utilities, about the same. Consumer discretionary. All right. Last things last. I owe you a video by tomorrow. That was my commitment to you for this, to discuss this dashboard. You last week worked on your trade log. Now that you've worked on, or you're already there. Now that you've worked on your trade log, you are ready to process the analytics and understand all of this and start thinking of ways to improve the size of your wins, reduce the size of your losses, possibly increase the percent winners. Those are very important things for us. So we need to have these numbers so that we can say, have I accomplished that? Is it getting better? Is it getting worse? This is what we're doing this week. And then next week, we start talking about goals and how do we take this data and turn it into trading improvement. And then we start over. We do it all again. So I apologize for the friction caused by my Thinkorswim issues. They are hopefully going to be resolved shortly. I will see everybody tomorrow at 8:30 p.m. Talking options. It's going to be a wonderful time. I hope you can join us. If not, I hope you watch the recording. Wednesday, regular time, 9:15 a.m., 15 minutes before the market opens. All right. Well, thanks, everybody. I hope you enjoy the rest of your day. It's great to see you. As always, happy trading.